Hello traders and welcome back to this channel. Ichimoku Cloud, one step closer to profit number 2. In this video I'm going to show you how to use Ichimoku indicator, interpret it correctly and apply it to the stock market. I will also introduce 3 powerful trading strategies to implement and translate the theory into step-by-step practical examples, which this will enable you to trade immediately. This is what you're all excited to see. So please go ahead and smash that subscriber button, and thank you for supporting this channel to grow. If you're not familiar with Ichimoku Cloud, that's all right. It is a trend following indicator that functions pretty much like simple moving average. It makes higher swing high, higher swing low, that is for uptrend, lower swing high and lower swing low, that is for downtrend. Except that Ichimoku indicator is more powerful and important than a simple moving average. Here I want to compare the Ichimoku Cloud with simple moving average. This is a simple moving average with a 50 days period. Moving average can be used as dynamic support and resistance levels, but it only provides a single level, whether dynamic support or dynamic resistance. Whereas in Ichimoku Cloud, it provides a zone of support and zone of resistance. I will show you in the next slide. In this slide, unlike moving average, you see Ichimoku Cloud provide a zone of support and a zone of resistance. Also, this indicator provides different dynamic support and resistance for short-term and medium-term trend, which here both of them act as short and medium-term resistance. In my opinion, that's why Ichimoku is so powerful indicator, and in my next few slides I'm going to elaborate more on how this indicator can simplify trading by providing different support and resistance levels for short and medium-term trading. So please keep on watching to the end of this video. First, I'm going to introduce the 5 essential components of Ichimoku indicator, and the first one is Tenkan-sen, otherwise known as conversion line. It considered as short moving average indicated with blue color. It follows the price trend closely. Traders use this line as dynamic support or resistance for medium-term trend. It can also be used to trial your stop loss and exit the trade just like normal moving average. It can also be used for scalping or any short-term trading. The second component is Kijun-sen confirmation line, or otherwise known as the baseline. It considered as a slow-moving average for the medium-term trend indicated with red color. You can use the baseline as support or resistance levels and put your stop loss to exit your position just like normal moving average. Conversion line and baseline coincidentally has the same period as in MACD calculation. The third component is lagging span, otherwise known as lagging line. Lagging line is typically used as a confirmation of signals, and also it shows the overview of the trend. When lagging span is above the price, it indicates a bullish bias and the trend is heading upward. When lagging span is below the price, it indicates a bearish bias and the trend is heading downward. If you see the lagging span or lagging line is spinning around the price up and down, it is a sign that market is in consolidating. Lagging span can also be used as dynamic support or resistance, just like normal moving average. The fourth and fifth element of Ichimoku indicator is leading span A, indicated with green color, and leading span B, indicated with red color. These two lines make the Ichimoku Cloud. Now, this is leading span A, that's the green color, that is leading span B, that is the red color, and both of them makes this this cloud. Now, if the color of this cloud be green, that's a bullish Como cloud. And if this color be red, that is bearish Como cloud. Como cloud is probably one of the most important elements of Ichimoku indicator. It provides a strong dynamic zone of support, indicated with green color, and a strong dynamic zone of resistance, here indicated with red color. Now that you are familiar with different components of Ichimoku cloud, we want to know what is the theory behind the power of this indicator. As I explained earlier, the conversion line used as fast moving average for any short-term trading like scalping, and you can use this line for trialing your stop loss or exit your position exactly like ordinary moving average. One of the important aspects of medium-term trend conversion line is to measure the short-term momentum, and when the price is above the conversion line, it means we have an uptrend momentum in place and the trend is heading upward. Conversely, when the price is below the conversion line, we have a downtrend momentum in place and the trend is heading downward. Baseline is the same as conversion line used as a slow moving average for medium-term trend. When the price is above the baseline, we have a bullish signal and the medium-term trend is upward. Conversely, when the price is below the baseline, it generates a bearish signal and the medium-term trend is downward. The third component is lagging span, otherwise known as lagging line. Lagging line is typically used as confirmation of the signal, and also it shows the overview of the trend. When lagging span is above the price, it indicates a bullish bias and the trend is heading upward. When lagging span is below the price, it indicates the bearish bias and the trend is heading downward. If you see the lagging span is spinning around the price up and down, it is a sign that the market is in consolidating, so you should avoid trading. Lagging span can also be used as dynamic support or resistance, just like normal moving averages. When lagging span is jumping up and down around the price, it is a sign of consolidation and traders should avoid trading. Please be aware that traders should avoid trading when market is in range bound, sideways market, and consolidation, because moving average does not perform well in those situations. And finally, the Como cloud. When price is above the Como cloud, we have a bullish trend. And when the price is below the Como cloud, we have a bearish trend. The longer the price stay above the Como cloud, the more established the trend is, and if this situation continues for quite some time, traders should prepare to exit against the trend, because the price cannot continue upward forever. Wider Como cloud means a strong dynamic support and resistance, and conversely thin Como cloud means weak or narrow dynamic support and resistance, which resulted into price consolidation, and traders should avoid trading. When price is in Como cloud, traders should patiently wait until the price exit the Como cloud and then attempt entry. So far, we have learned what is the role of each component in this indicator. Now you are so excited to know how to trade and apply the theory into step-by-step practical examples. So please keep on watching to the end. How to trade with Ichimoku Cloud Indicator. There are 3 trading strategies here to implement in this video. The first one is crossover conversion line and baseline using lagging span as filter. The second one is crossover, conversion line, and baseline using Como Cloud as a filter. And finally, the third one is trading the Como Cloud breakout. Now, in the first strategy, when the fast-moving conversion line crosses above the slow-moving baseline and the price be below the lagging span, then we have a valid bullish crossover and you can proceed to buy. Conversely, when the fast-moving conversion line crosses below the slow-moving baseline and the price be above the lagging span, then we have a valid bearish crossover and you can proceed to sell or exit the trade. Here, lagging span is used to filter out the signals. Let's look at some trading examples. This is the first example, a strong buy signal. Crossover strategies using conversion line and baseline. So this is conversion line and this is the baseline, which the conversion line is above the baseline and the price is below the lagging span. So here we have a strong buy signal. And also we use the lagging span to filter out the signal. Now I show you how I enter the trade. This is how I would do my entry, stop loss, and take profit. Example number 2, strong sell signal, crossover strategies using conversion line and baseline. Now this is the conversion line, the blue line, which is below the baseline, the red line, and the price is above the lagging span. So that is a good indication of a strong sell signal. And also we use the lagging span to filter out the signal. I show you how I enter the trade. This is how I would do my entry, stop loss, and take profit. The second strategy is crossover, conversion line, and baseline using the Como Cloud as a filter. This strategy is a slight variation of the first one, and the Como Cloud is used as filter instead of lagging span. When fast-moving conversion line crosses above the slow-moving baseline and the price be below the Como Cloud, then we have a valid bullish crossover buy signal, and you can proceed to buy. Conversely, when the fast-moving conversion line crosses below the slow-moving baseline and the price be below the Como Cloud, then we have a valid bearish crossover and you can proceed to sell or exit the trade. Here, Como Cloud is used to filter out the signal. Let's look at some trading examples. Example number 1, strong buy signal. This is the price trend. And here, the conversion line, the blue line, is above the baseline, and the price is above this Como Cloud. Here we have a strong buy signal. And also, Como Cloud is used to filter out the signal. I show you how I enter the trade. This is how I would do my entry, stop loss, and take profit. This is the price trend K stock, Yo Finance. Example number 2, strong sell signal. Now, this is the conversion line, the blue line, which is below the baseline indicated with the red color, and the price is below the Como Cloud, and Como Cloud is used to filter out the signal. Now in this situation we have a strong sell signal. I show you how I enter the trade. This is how I would do my entry, stop loss, and take profit. Finally, the last trading strategy is trading the Como cloud breakout. When the price enters the Como cloud and break out and exit the upper edge upward, it generates a bullish buy signal, and traders should prepare to go long or enter the trade. When price enter the Como cloud and break out and exit the lower edge downward, it generates a bearish sell signal, and traders should prepare to go short or exit the trade. When price enter the Como cloud and reach the upper and lower edge, we may have a trend reversal or price rejection. In three situations, we use price action and whatever we learn from this indicator to enter or exit the trade. This is the price trend T stock Yo Finance D1 time frame. In this situation, we have the price which is coming from lower edge entering the Como cloud and break out the resistance level, which here that is span B indicated with red color, that act as dynamic resistance level. It break out the resistance, bounce a bit back, and finally it hits upward. So this is one way that we have a strong upward or a strong buy signal. There is another way that we can analyze it. This is the conversion line, the blue line that's above the red line, that's the baseline, and the price is below the lagging span. So this is another way that we can say we have a strong buy signal. I am going to show you how I enter the trade. This is how I would do my entry, stop loss, and take profit. Example number 2 is strong sell signal. Here this is the price trend that is entering the Como cloud from the upper edge and exit from the lower edge. The upper edge is leading span A, used as dynamic resistance level, and the lower edge is leading span B, used as dynamic support level. So the price enter inside the Como cloud and break out the support downward and generate a sell signal. But we have to wait for this candle to be completely out of the Como cloud. Now, another way that we can say we have a strong sell signal is, this is the conversion line, the blue line is below the baseline, and the price is below the Como cloud. So it generates a sell signal. Or we can say this is conversion line, which is below the baseline, and the price is above the lagging span. So it generates a strong sell signal. I show you how I enter the trade. This is how I would do my entry, stop loss, and take profit. Example number 3 is strong sell signal using price rejection or price reversal. This is bearish Como cloud, and the upper band indicated with the red color is leading span B, here act as dynamic resistance, and lower band indicated with green color line leading span A, here act as dynamic support. The price is going upward here and here entering the Como cloud, and it gets rejection by the resistance level, bounce back and hit the support level, dynamic support, and again rejected again all the way until it hit the resistance level, and this is a shooting star. And due to this shooting star, the price reverses. That's we have a price reversal and heading downward and break out or break down the support level and going completely out. Have a little bit pullback and going out or downward strongly. So some traders, they exit here, and some traders, they wait until this candle is going downward after the pullback, and they exit the market here. So, but you have to wait the candle come out completely from the Como cloud. So now here we have a strong sell signal. You can analyze it this way too, that this is conversion line, that's a baseline, and conversion line is below the baseline, and the price is below the Como cloud, that's a strong sell signal. Or the conversion line is below the baseline and the price is below the lagging span, so that's a strong sell signal. I show you how I would do my entry. This is how I would do my entry, stop loss, and take profit. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.